From the management today, we have Mr. Dilip Piramal, the Chairman, Ms. Radhika Piramal, the Executive Vice Chairman, Mr. Sudeep Ghosh, the Managing Director, and Ms. Neetu Kashiramka, the CFO. Without any further ado, I'll hand over the call to Mr. Piramal for his initial comments, post which we'll open the floor for Q&A. Thank you, and over to you, sir.
Good afternoon, everyone. Thanks for taking out time and joining our conference call. I would like to reiterate to all our esteemed panelists, participants, that our company is among the worst affected sector, being part of the travel industry, and our operations have been severely impacted due to this pandemic. Beginning of quarter three is showing good pickup as we enter the festive season. Hopefully, demand should revive in the remaining part of the year due to the festive season, school starting, and some pent-up demand on account of marriages. And a little bit of the travel industry also is gaining some revival in the domestic sector. International travel is still not open at all. Of course, there are a few flights, but very little. During the second quarter, Q2 FY21, income from operations was at 108 crores against 415 crores in the corresponding quarter of the previous year. Loss for this period was 33 crores as against 33 crores of profit last year. However, if we look at sequential quarter on quarter, revenue from operations, which was only 7% of pre-COVID levels in Q1 FY21, was at 25% in Q2 FY21. So from 7% of pre-COVID levels, we did 25% of pre-COVID levels in the second quarter. As mentioned earlier, also, during Q1, focus of our company was on cost control and cost rationalization. Fixed cost, which used to be 40 crores per month at a consolidated level last year, will be at 24 crores per month in this year. Let me also brief you about our liquidity situation to take care of this tough time. We had plans to borrow around 300 crores to have a war chest for these tough times. Current borrowings stand at 204 crores. However, net debt is nil, which means we have borrowed but not utilized these amounts. We have actually drawn these amounts and invested them we made investments so that, it should not happen. We are worried that if in bad times the banks have given us the limits, but they then might cancel it later on. So to play safe, we borrowed this money, drew it and invested it. And then later on, our CFO Neetu will give you details about these. Update on the VIP Bangladesh operations. These operations started only with producing masks. We took on, since we have these sewing machines, and it's a tailoring operation of soft luggage in Bangladesh. We started producing masks, and we are selling now about 3 crores of masks per month. So that is quite good. We're saying it covers our overheads in Bangladesh by about 1 crore. And there is a good margin on the sale in India. Luggage manufacturing will start only in this third quarter. We already started in October in a very small manner, making luggage, and they will go up gradually because we still are quite well stocked up. As you might remember, that April to June is our largest quarter, and virtually we will have what we are planning to do in the April to June quarter. Originally, I don't think we will do that 750 crores in the entire year this year. And income from operations from VIP Bangladesh was, in the second quarter, was 18.2 crores. And profit after tax was a negative of 2.4 crores as compared to 10 crores loss during the first quarter. With that, I hand over floor for questions, please.
Sure. Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question at this time, they may please press star and 1. The first question is from the line of Shanti Patel from Shanti Patel Investment Advisors. Please go ahead.
Oh, good afternoon, sir. My simple question is, how much time it will take approximately to go back to our original level? That is, the normal level, sales, profit, etc. And secondly, okay, fine. This much will do.
Okay. This time I'm proposing that our MD answers most of the questions. So Sudeep, please, but I will direct for each question who should answer it. Yeah, Sudeep, kindly take over.
So it's a very difficult question to answer if you ask me. As Chairman said that we're definitely better off from the last quarter to this quarter. But pre-COVID levels, I think will take at least year and a half to reach there if we do well. It all depends on how quarter 3, quarter 4 pans out, and so definitely COVID has taken this industry back by between 2 to 3 years, depending upon how the organizations fire in the coming time.
So impliedly that means the minimum, the approximate figure I'm talking about, it will take 1 to 1.5 years if everything is moving in the way we are moving.
Top line, yes, but also what has happened in COVID is we have become far leaner and far, we have ensured that all the flab is gone. So profitability-wise, we'll probably come back faster, but top line level, it will take anything between 2 to 3 years.
See, I also want to say that as a company, what we are planning now is that we will try and get some more international business. So far, our international business is predicated basically on our Bangladesh operations. And what we sell from Bangladesh to India is much more profitable than what we can sell from Bangladesh to abroad. Yeah. So till now, all our Bangladesh operations were only for India, and in fact, we were not even meeting 50% of our requirements from Bangladesh. Now that the markets have gone down, we will try and see that we get more sales from abroad, which are not very much at the moment, but we have to build that market. But because of our Bangladesh operations, we feel we can do that. It might take us a year or so. So overall, our volumes will go up, So we are not only depending on Indian operations, and then it's very easy for us to expand our Bangladesh operations. So prior to pre-COVID, we had great plans to increase our Bangladesh operations, even for the domestic market. Because even the domestic market, as I said, we are not even producing 50% of our requirements. And the domestic market was growing. So now I'm looking forward to a time that within a year we can start expanding our Bangladesh operations also for the international market. So as a company, we will have much higher growth. We can hope for higher growth than just depending on the domestic market.
Right. Thank you very much. Thank you, sir.
Next question, please.
Thank you. The next question is from the line of Dev Shah from AMA Growth Advisors. Please go ahead.
Good evening to the entire board of VIP Industries. Wanted to know, specifically around VIP's online strategy. Been, following and seeing that there are several, new age e-commerce brands have come up who are selling direct to consumer. So what is VIP's direct to consumer strategy, and what is its reliance on third party e-commerce moving forward?
Sudhir?
Yeah. So one good thing that has happened is, COVID has taught all of us that e-com is going to become big, and in fact, e-com growth overall, if you see, has been 40%. To give you an understanding, our initial mix of e-com with our sales was about anything between 7 to 10%. Currently, we are at 27%. We have started growing in absolute terms in e-com from September onwards, and we feel that e-com is definitely going to be one of our mainstay channels going forward, and we are fully prepared for it. It's a new industry, but we have learned very fast. We have also taken some senior people from the industry to join our team, and that has really helped, and therefore we are very confident that that's one channel that we will ride this time, this year and the years to come. So in an average, if you see, my understanding is our mix with e-com going forward would be anything between 20 to 25%.
No, Mr. Sudeep, my question was more around, whether you're going to be relying more on your Amazon and Flipkart for your e-commerce strategy, or are you going to be building out your own direct-to-consumer brand from your own website?
See, it is like this. Imagine Amazon and Flipkart being the departmental stores, and our own store being the exclusive stores. Okay, it has to be both. You cannot say one to another, because consumers are going to go both. To start with, definitely, if there is a departmental store which is selling luggage, we would like to go in there, and we will build our own capabilities also. But if you ask me,
I would like to just say something, that e-com is also like one more channel of trade.
Yes.
Yeah. So, as Sudeep said, that it's a retail channel. Like earlier on, we had only these high street stores. Now you have our own retail shops, then we have department stores, hypermarkets. So e-commerce is one more channel of trade. So we also can have that, our own channel. And there are various brands which come in the e-com. Like sometimes people get confused also that e-com, the brand has no value. Brand has all the value, because if you're selling a branded product on e-com, let's say on Amazon, and a non-branded product on Amazon, it is not going to get the same price. So the brand always has the value.
And how is it going to impact your margins moving forward? Because if you're saying that's going to be a dominant source of your revenue, then what's going to be the margin impact, because you're going to be relying...
That is the biggest challenge in e-com, because the margins definitely are lower, but then your costs also are lower. But what happens is, how do you manage the rest of the trade? Because there the costs are higher and we cannot offer the same price. So that is the challenge. Sudeep, would you like to add anything?
Yeah. And what we will also do, please understand, is we are going to make for e-com. Okay. So currently, when you make from e-com, you make products which are, so if selling cheap doesn't mean that you will lose gross margin. I keep saying this. I've said this earlier in many of the calls. Selling cheap is to make products which are low-cost products and yet get a percentage gross margin that you desire. So now that we are planning to sell for e-com, we'll produce for e-com, and therefore the gross margins will get protected. In the current scenario, if I have to tell you that because we have stocks and we are liquidating, we would have very temporary impact on the gross margin, but that we will make it up as we reduce stocks and start making products for e-com.
Got it. Thank you.
Thank you. The next question is from the line of Jinesh Joshi from Prabhudas Lilladher. Please go ahead.
Thanks for the opportunity. I just have one question. Sir, we have a debt of approximately 200 crores, and you highlighted that we have plans to borrow 300 crores. I just want to know whether we will really kind of require additional 100 crores, because we also have some 50 crores coming in from the insurance claim this year. So will the additional money be really required in terms of debt?
Neetu, please answer this.
Yeah. So, Chairman said that we had plans, but as of now, we don't intend to draw. So these are limits which we have kept ready, but we don't intend to borrow anything further immediately. Because
Let me tell you that, when we, in March, it was a sort of panic sort of situation, because, let's say in April, and we didn't know what is happening. Sales had absolutely stopped. There was lockdown. So we wanted to play safe. our experience so far in these 7 months have been much better than what we thought. Like our receipts have been slightly more than our payments, and we are still in a debt-free position, net debt-free position. So we are quite happy about that. We were prepared for sort of more difficult situation, and so far we are carrying out doing quite well. But we had to. It was very difficult to see how things will go out, the 6 months in April. So we had to take some precautionary measures. What has also happened that there's a lot of liquidity with the banks. At that time, we thought that maybe by December, if things are bad, banks might give us limits and not then cancel it also at the last moment. So we drew these limits also. So 200 crores we borrowed and invested. Today, Neetu, our investments are more by about 30 crores than our borrowing.
As on October, yes.
Yeah, as on October. So we actually 30 crores surplus we have. So, this is the overall situation.
Okay, sir. One last follow-up. Sir, this top line of 100 crores or that we have achieved in this quarter, is their average selling price materially different than pre-COVID? Because we have also offered some discounts, if I'm not mistaken.
Yeah, Sudeep, I think so, no?
Yes,
prices are lower.
Absolutely. See, with all companies having very high stocks across all categories, I must say, there is a plethora of discount which is there because everybody is trying to liquidate the stock that they had built up. Remember, we were getting into the most highest season, like Chairman said, which is April, May, June, and therefore we are carrying quite a bit of stock which we need to liquidate as fast as we can. So yes, there is a drop in ASP if that's what you're asking.
Possible to share the extent of discount?
No, I don't think, it's a very dynamic one.
It varies from sector to sector, product to product.
Product to product. Time, sometimes so you have to also react to certain market share protection. So it's very difficult to say that.
And see, even till now, our overall sales have been 140 crores in the 6 months. So it's not a very large figure. The overall sales also is not very large.
Okay, sir. Thank you so much.
Thank you. The next question is from the line of Tejas Shah from Spark Capital. Please go ahead.
Hi, team. Thanks for the opportunity. So first question pertains to, in the opening remark, you spoke about permanent resets on the cost. Last quarter, you had given a detailed summary on what initiatives you are taking on that count. So any incremental steps that you can share that you would have taken this quarter as well on the permanent resets on costs?
I don't remember exactly what we said in last quarter. Sudeep, can you answer this?
Yeah. So the couple of...
And Radhika, whenever you want to come in, you please come in. Huh?
Yeah, sure.
Yeah. So the major cost initiatives have happened on the manpower, fixed EBO operations. Those have been were actioned in quarter one, and the biggest their impact is actually being seen in quarter two. We are also trying to find out any more inefficiency which is there in our organization in terms of operations, and we are taking adequate steps to it. There are one or two of them which I would not like to discuss currently, but we are working on it. Maybe in quarter three call we might be able to discuss. But yeah, whatever we have taken, whatever we said we will do, we have actually done, and those are flowing in.
Okay. Second question, Mr. Ghosh, pertains to your observation that it might take 21 to 18 months or 2 to 3 years for us to bounce back or go back to the earlier levels. But if I see some of the allied industries commentary like hotels, airlines, they are much more hopeful of a sharper recovery if COVID is not around next year. So any reason why we are expecting slightly longer or for full recovery versus the allied industry part, or is it just a rough estimate?
Listen, I don't know let me answer this. I don't know which airline industry you're talking. Airline is very badly affected.
So allied industry, I meant hotels and others. So they are running.
Airline, these are the two major industries in the travel business. Airline and hotels. And in fact, for our board meeting, we even had we presented them the accounts of Indigo, East India Hotel, that is Oberoi Hotels, and the Taj Group of Hotels. And they are in a worse situation than us. Sales are more or less similar, revenues are similar to ours, proportionately. But because their overhead cost structures are slightly higher than us, hotel industry has very little variable costs. We have a lot of variable costs and all that. So their overheads are the main expenses. They cannot do anything about the hotel costs and all, the cost of the building and all that. So, in fact, I was seeing one program on travel on CNN, and they were interviewing Airbus and Boeing separately. And Airbus said that they're going to take 5 years to come back to the levels, because you see what happens in any industry, the capital investment goes down. So if the airlines take about 3-4 years to come, even 2 years to come back to their old capacity utilization, they're not going to buy new aircraft. So I don't think airline industry is going to get, or hotel industry is going to get normal in 1 year. Because domestic travel is starting, but international travel is not starting.
I would like to add one perspective here. It's early to say in India. We have seen that the UK, Europe and North America is having a different sort of recovery than, let's say, China and the Southeast Asian countries. At this stage with India just, I would say, meaningfully coming out of lockdown, I'll say September onwards. It's too early for us to judge in mid-November. Will India follow the Asia model or the Western model? We can be hopeful it will follow the Asia model, then the recovery can happen faster. But if it follows the Western model, which is repeated lockdowns, then it can be slower. And it's very difficult to judge sitting here today which of these things will work out.
And why I'm a little bit more optimistic about VIP industries, only my company, is because we are in a unique position where we can get some market share from international markets. It is not possible, for example, for Samsonite, because they are already very large in international markets. They are the only multinational. Similarly, I don't think it is possible for any of the other Indian companies, which are very small in any case, and they don't have manufacturing operations in Bangladesh or in a low-cost center. And similarly, all these things are not applicable for, let's say, for an airline industry. Because all these, today, or a hotel industry, they're not going to, in 2-3 years, get any market share abroad. They have to set up hotels and buy hotels and all that. And as it is surplus capacity there. So this sort of unique situation is there only for us. And that can make a big difference for our company.
Very helpful. Last quarter, about the category.
We are not able to hear you.
Yeah, is this better? Hello?
Yeah, now it's better, yeah.
Yeah. So last quarter we spoke about that to diversify single category risk, we might enter into a few more categories to leverage the brand and distribution that we have. So any update and any plan of rolling out those initiatives in this fiscal, or will wait for FY22 to roll out?
Yeah, I'll tell you, we have already started making masks, and we have reached a level of about 3 crores a month. And that is giving us net contribution, means that is reducing our losses by about nearly 50%, means on 3 crores, we save about 1.5 crores or even slightly more, because we are manufacturing these masks in Bangladesh. So our fixed overheads of workers and all that, which otherwise we would have had to pay, that is getting covered. So that is helping us by about 18 crores a year if this business sustains, and I think for some time it will remain. We had one other item, a category, but now we are not in a rush to do it, because we don't feel that this is the right time to enter a sort of much bigger business. The mask was okay. We didn't have to make any investments at all in manufacturing, and it was giving us good revenue, and there is instant demand. In some other sectors, we thought that we have to make investments. It's a totally new business, so we are not in a rush to do that. And today, even our management bandwidth is not so strong that we can start a new business. I mean, there are better opportunities. I would rather, we are also, as you might be aware, we are in the ladies' handbags business. And so far, we are buying all these handbags from China, mainly from China. Radhika, are we buying anything from India?
Yes.
Very small.
But the majority is from China.
Yeah. So it is much better for us to make these in Bangladesh. So rather than getting into other new businesses, we thought we can concentrate in Bangladesh. We were not having the bandwidth earlier, in pre-COVID period, because Bangladesh would be very busy in expanding our activities for the Indian market, produce in Bangladesh for our Indian market. And we thought we will do the handbags a little bit later on. But now that things are more difficult and there is not so much demand, we have to work a little bit harder and start manufacturing handbags in Bangladesh. So that will also give a good boost to the handbags market.
Okay. And the last one from my side. Any update on insurance claim release?
Me too.
Yeah. So things are moving ahead, but I think it might take another 2, 3, 4 months to get a clear picture. But yeah, things look positive now as we move along.
I think the insurance companies are also sort of, COVID is a genuine reason. I mean, everybody is slowed down.
Yeah, they are also.
And they are also, I mean, not.
Yeah, earlier a lot of people were not working.
Yeah.
But now things have started to move. I think by next quarter we should be able to give you a concrete answer on this as to when do we get it.
Fair enough. That's all from my side, and happy Diwali to the whole team. Thanks.
Thank you.
Thank you.
Thank you. The next question is from the line of Nisarg Vakaria from Lucky Investment Managers. Please go ahead.
I heard a statement that we have cut a lot of flab in the organization, and a lot of organizations have done the same in COVID. My question was, can you quantify the absolute amount of cost saving that we have done? Or if you could answer in a way that in a hypothetical scenario, if we go back to the 1,800 crore top line, previously we were at about 14% EBITDA margins pre-Ind AS. So the margins would look higher by how many basis points?
So no, margins are not going to be higher. Margins are going to be lower only because overall sales come down. So when sales come down, margins also come down. You know, and but Neetu, just give some more details of how much.
So basically, for this year, the fixed cost saving is going to be 180 crore, and 50% of this is sustainable, and 50% of this will come back once the business is back. So I think
so 100 crores of the cost is now a sustainable saving. Whenever the sales ramp up, that 100 crore of cost is not going to come back into our company, right?
Correct.
Yeah. Not for a while. I mean, maybe after 2-3 years they will come back. You know, the fixed overheads also are fixed only for, let's say, 2-3 years. If business grows very much, then even fixed overheads go up.
Right. Okay. Thank you. That was my question.
And did you understand this whole thing about EBITDA margins and all? You see what happens is that.
Yeah, sir, I understood. My point was slightly different.
No, you said how much will the EBITDA margins?
So that he can calculate. He will get.
Sir, I can calculate that because that 90 crore is the cost saving that you are saying you will do regardless of the sales at some point of time in the future.
Immediate future. Yeah.
Right.
Thank you. The next question is from the line of Karan Khanna from Ambit Capital. Please go ahead.
Hi, thank you for the opportunity. So my first question is to Sudeep, sir. So when you say that you expect the company to reach pre-COVID levels in the next year and a half, I understand it's a very difficult number to project given the challenging times. But internally, do you track how much of your sales are driven by domestic travel, international travel, institutional, and say other avenues like wedding, etc.? Because from what we understand, the international travel is still far distant away before it starts seeing any meaningful signs of recovery.
Yeah. So if you see, we as an organization is very strong in the heartland and in areas where marriage is a very important So I'll give you an example. Most of our business, if you have to divide between travel and wedding, it's kind of 50-50. The year, in history and in past, we have seen the year the marriage dates are less, our growth really gets impacted. Now, there is a pent-up demand of marriages. The marriages have not happened in last 6 months, and I don't think it's going to happen in the next 6 months either, because, where VIP is strong, marriages happen during summer. The reason being, to have marriages in winter is very expensive. So
let me butt in. I have a very interesting information to give you.
Sure, sir.
In April, we operate all over India, so virtually every state we have a branch. In April and May, our highest selling branch is Bihar. And I think Bihar does 70% of its annual sales in these 2 months. Am I right, Sudeep?
Yeah, Bihar.
It's a phenomenon. You have to see. And this is only specific to VIP.
Yeah.
Our market pull is so strong in Bihar and Eastern UP that
in fact, there is no marriage without VIP. That's what they say.
Yeah. It is, and even there, I'll tell you something. We make, earlier on, Aristocrat used to be a competitor. It used to be a separate company prior to 1988. And we make similar products. And later on, when we merged the two companies, we started making the same product. Only the label is different. Means one has a VIP label and some products have Aristocrat label. The VIP product sells at about 20% higher price. And it has a much, much larger market share. In the same product, exactly the same product, the one which sells under the VIP brand has a higher price and a higher market share. So that is the pull of the brand. So we are very strong in the eastern region in this marriage market. And the reason also is that the eastern region is the poorer region of India, right from Bengal, Bihar, UP. And the international markets and all are much stronger, let's say in Delhi, Bombay, even the south, like Samsonite and all. So our market share in the east is very large. And a lot of it is this marriage segment. I mean, in Bihar, it is phenomenal.
So to answer the question, is this pent-up demand that is there? We presume that next year, April, May, June should be very, very good. That is one. And the domestic travel also would come back. So international travel will take time. But if you see, hopefully, somebody in the call also said, so this is these two, and what Chairman has been saying, that there is a big opportunity for us to go after the international market, which as of now we didn't go because we didn't have the capacity, which now that we have. These are the three factors which will push ourselves faster than anybody else in this sector, definitely among the three competition that we have.
Sure. Well, that was useful, sir. Thank you. A second question was on CSD imposing a ban on import of finished goods. Now, in the last call, you did mention that you've started procuring soft luggage from domestic vendors in India. In a more normal year, how would this impact your margins, blended margins for the company, or do you think that CSD as a channel will lose its relevance in the next 1 to 2 years and hence wouldn't have a meaningful impact on your margins?
No, definitely it will not. CSD will remain an important part of our sales, but its percentage in our sales is definitely coming down. At one time, it used to be nearly in excess of 25%. And now it's come down to about 15%. But we will make up. We can even manufacture our own in India. We don't have to rely on outside vendors. There's nothing which prevents us from. And in fact, this whole Make in India and all process is going to be useful to us also. And probably in some states like Jharkhand and all, they are offering good opportunities. So far we had Bangladesh, so we did not consider that, but we will start manufacturing somewhere in the east, The costs are not so bad there.
Okay.
But you see, prior to this, Bangladesh was much better. But there's nothing which prevents us from setting up an operation in India.
Okay. Okay, thanks. And Neetu, on with the Future Retail Future Retail and Reliance deal coming under the legal scandal, how do you see this impacting a recovery from Big Bazaar?
So we'll have to wait and watch because currently we don't know, right, what is happening. But we understand that this might take 3 more months to close the deal. So once that happens, I think recovery will be.
But the silver lining is that their other, which is Central and Brand Factory, they have started paying. So we have started getting monies from there. So it's just the Big Bazaar piece, which is where it is there. But indication is by the end of Q3 or maybe early Q4, they have uploaded So one of the good things that has happened is on their website they have uploaded the outstanding of each of the vendors. Okay, which is therefore there is no discrepancy that would be there. So whatever is outstanding has been shown, and we have kind of seen it's kind of roughly matching to a very large extent. So the money in that way is safe. In terms of whoever takes over has to pay because it's already uploaded.
This website is only for the suppliers, or is it open?
It's for suppliers.
Okay,
So just for everybody. So therefore the money is there. It's just that the deal should have been done, but it's got into its own.
Okay, no, it is for each individual supplier. Like they put in how much they owe us. They won't tell us how much they owe Safari or anybody else.
No, so it's there. No, you can actually see. You can actually see there. So it's available.
See what?
And therefore the vendor wise outstanding which is there. We have, and therefore
no. So we can see only what is owing to us.
Which is asked,
not to the others.
No. So therefore the money is safe for us, and it's just that. But the other two entities, which is Brand Factory and Central, have started paying slowly.
Okay. I think that would be it from my end. Thank you. All the best, and a very happy Diwali to all.
Thank you.
Happy Diwali.
Thank you. The next question is from the line of Aditya Bhagat from Equentis PMS. Please go ahead.
Hi, good evening, and thanks for the opportunity. So when you said that you would not be investing in a particular line of business for now, so did you mean that the new line of business that you had hinted at in the last quarter, that has been delayed or postponed for now? Is that the
Yes, that is right.
Okay. So that is one. And
we had not done much. We just had done some little bit of research on the market and all. So it's not, and that was all internal. I mean, we have not spent anything extra on that,
Okay. And that's delayed, right? I mean, it's not cancelled.
Let's see, I mean, delayed, cancelled, whatever. I mean, there's nothing, it wasn't so concrete or anything, it wasn't something very big.
Okay, got it, sir. And my second question is on, when you said, like earlier on, one of the participants asked, you said that there are certain products which we will be making differently for e-commerce. So what exactly do you mean by that, making differently for e-commerce?
Okay, so I'll take this question. See, there are various kinds of material available, right? It's like when you go to buy when you go to make a suit, there is material which is 2,000 rupees meter. There's material. So for e-commerce, you don't use the expensive material, you use the lower material, and therefore the cost of the material comes down. The kind of wheels that you use, the kind of though there will be all quality. It's not like we'll compromise on quality, but there are various kinds of products that can be created where the cost, which is the BOM of the product, is far lower than what you actually do, and therefore even if the cost comes down because even if the price comes down because your cost is lower, you can still make a decent margin. Therefore you make for the channel. You don't make for, and that's the key to success, because for e-com we need to make for e-com. For CSD we need to make for CSD and sell those products. That's how it has to work.
See, can I explain to you a little bit broadly what is happening basically in e-com? That it can become a very large volume business for the lower end. Yeah, so far we are not really concentrating too much on that lower end, and also it was also the unorganized sector. So now the unorganized sector cannot cope with e-com so much because they need good volumes. They need much more organized, and the unorganized sector is very small. The luggage industry by itself is a very small category. So our unorganized sectors are even smaller, so they cannot really deal with all these e-coms and all. So we will get a bigger market share of that, but that's a totally different, it's a lower end product, so obviously the costs also are lower, it's not the same product. As he explained very well, there's a 2,000 rupee fabric and there is a 300 rupee fabric also. This is like a very cheap shirt, you can say.
Okay. Got it, sir. That was a very.
And again, I want to reiterate, because it's a very common feeling amongst a lot of people, including many consumers and important business people also sometimes make a mistake that the brand always remains. This Amazon and all are not sort of conflicting with the brand. And they're not really conflicting. They are another channel. So it's not that it's a totally different type of business. But it has its own peculiarities. So we have to adjust to that.
Got it, sir. Sir, and lastly, my question is on, the demand for luggage could obviously take some more time to come back, probably with some help from weddings and all that. But then, apart from that, what is the kind of trajectory that you're seeing in handbags or backpacks now that some people have started working from offices and all that? Is there any strength over there?
Backpacks is one sector which will grow the fastest, and this e-com and all, biggest market is backpacks, huh, Sudhir?
Yeah, but sir, the only issue is because backpack is driven primarily by schools and colleges. So till the time schools and colleges don't open, that will not happen. But the moment it opens, like Chairman said, it will be really fly because, there would be, so we see every year when the new session comes, there's a huge buy of backpacks. So backpacks will definitely come back, and like, one of the callers had said, the short distance travel will happen. So we will see a lot movement of backpacks, duffels, this kind of products, much more than probably the luggage, but they all depend on how the schools open and, how offices open. Even now the offices are not open really. If you really see, none of the offices are 7 days a week, or rather 6 days a week, or 5 days a week. They are usually 1 day or 2 day a week. So it will take time. As and when it opens, these will move definitely faster. But also remember that domestic travel is going to happen. That is something which is going to be there at the marriages. So these are and therefore we said that it's a gradual. The chairman started off by saying we are the worst affected. It will take some time for all the ingredients to come back to the industry in the category.
Okay.
So I just want to reiterate 2 points. One is that these are smaller items, these backpacks and all, these are at the lowest end of sector. So their sales is going to be the maximum on e-commerce. So these are really large volume items. And again, these are the items which are much better to be made in Bangladesh. It's much more economical to make them in Bangladesh than anywhere else. Because the smaller the items, the more the labor content. The raw material content becomes less. And the labor cost goes up. That is a big advantage for us in Bangladesh. So we are actually best equipped for these items, to compete in these items.
Got it, sir. Got it. Yeah, just one last question, if I can squeeze in. What percentage of our EBOs or MBOs would be open currently? Is it all of them are open?
No.
Yeah, so we have actually now taken this COVID and got, we have closed down a lot of non-profitable outlets. So overall, we have kind of closed down close to about 100 EBOs, which were not, and we said that, any EBOs which will not make profit after we reduce the top line by 50% is something that we don't want to carry. And that's how, so all our EBOs are now very profitable. As and when the malls are opening.
100 out of 250, yeah?
100 out of 250 was actually closed. So we are currently, and we are also evaluating the other ones. So what we are doing is, wherever the malls are opening, we are opening, and high street, most of them are open. So if you ask me, if around 70 to 75% of our stores will be open by now.
Okay. Got it, sir. Thanks a lot, sir, and a very happy Diwali to the entire team from me.
Happy Diwali to you. Thank you.
Thank you. The next question is from the line of Ronak Vora from AUM Advisors. Please go ahead.
Hello, sir. Do you see any kind of inorganic growth that we are looking after with cash that we have?
You mean inorganic growth, meaning buying out any company?
Yeah, buying out any brand or any company, since I believe that we'll be getting better valuations for them in current times?
Yeah, it's too early.
Sorry?
Nobody in it.
Chairman, we can't see you.
Sir, your audio is breaking.
Now? How is it now? Yeah, I'm in the same position. Hello?
Yes, we can hear you now, sir. Thank you.
Okay. See, in the luggage industry, there are very, very few players. I mean, there's nobody in India whom we can acquire. Yeah.
Okay.
And then internationally also, there are very few big players. As I said, we are at this level. We are at a pre-COVID level of 2,000 crores, and today at a COVID level of 600-700 crores, we are actually the second largest luggage company in the world. I mean, I find this very difficult to believe, but it is a fact. So there are not too many targets also, you know.
Okay. Anything on the backpack and or?
What do you mean?
So you're saying that it is quite not possible on the luggage end, but can we see anything on the backpack end or anything?
No, the backpack is even smaller. I mean, they're all small. Which can you think of any company?
So basically, I thought, making many small acquisitions, not some big player.
Which small? I mean, there should be something. Tell me. I mean, just give me an example. Without.
There are certain brands in backpack like Rockstar and all these brands which are very small, but
Rockstar is an Indian brand.
Let me just check.
Have you heard of it?
No, I have not heard of it, sir. I'm sorry.
No, but you can see them in rural areas for sure.
Sorry?
You can see them in rural areas for sure.
I have not heard of it.
Okay, no problem, sir. That's okay. So that's it from my side.
Thank you. The next question is from the line of Nishit Shah from Nepean Capital. Please go ahead.
Yeah, thank you for the opportunity. So I just had a question on the sale of the Haridwar factory, which was sold in August, September for 25 crores. So just wanted to understand the reason for selling it, because it was contributing around 27 crores in profit and around 250 crores in revenue. So the valuation seems on the lower end. So are we going to be able to produce this, generate this kind of revenue from Bangladesh?
Listen. What valuation seems to be on the lower end?
So the Haridwar factory is contributing 27 crores to the profitability of the company in FY20, and we sold the factory for 25 to 30 crores.
Yeah, but now the market is not there. So we can make the same thing at our Nashik factory.
Yeah, so actually my question was exactly that we'll be able to basically generate this kind of revenue from our other factories or not. That was the question.
Yes, definitely. But the problem is, the sad part is that we won't need to make so much, because our sales are down.
Correct.
And you see, the Haridwar factory was originally made because we were getting excise and sales tax concessions. So those stopped. That was for a 10-year period. So it stopped around 2010 or 2012. Yeah, quite for 5-7 years ago. So after that, because it was a low-cost factory and all, it was okay for us to run it. But that tax benefit had ended anyway. And whether we ran it at Nashik or we ran it at Haridwar, it didn't make a difference. Now that our sort of demand has gone down by more than 50%, and at least for 2 years it will remain like that, we can easily make it we can make that production in Nashik, or we can even make it in Bangladesh. And we save the overheads of Haridwar. So it is a very good decision, and we are making a good profit we are happy that we got a ready buyer, in such a short time, because generally industry is affected, but a lot of FMCG industries are set up in Haridwar, and the buyers are around those ancillaries of these FMCG companies. So we got an immediate, in fact, we're making a good profit on the sale of the assets.
Sure.
So, sir, can I just add? So,
Yeah, please.
this transaction is yet not completed. So, profit on sale of this will come in Q3.
Yeah.
Also, we are only selling the plot. So, land and building, entire machinery is getting shifted to Nashik. So, as and when the business improves, the production can be done in Nashik.
Yeah.
Okay, so just wanted to understand. So, we had purchased this at what price?
Listen, all these details are there.
See,
Na?
all this,
We'll give the details here. But we are making nearly, I think, let's say 20 out of the 25 crores. I'm giving a very rough figure. We are making a profit of 12 crores. Virtually, we are getting double of the land and the building price. That is what we are selling, land and building.
Okay. So I think that's a good explanation.
Yeah, very good.
Yeah.
Very good.
Yeah.
I'm surprised that we found a buyer so fast. The transaction is not completed. It will get completed in this quarter, I hope.
Yeah. It requires some regulatory approval from Pimco.
But I'm quite happily surprised that it's happened so fast.
Yeah, no, I had this question because the plan was doing really well and we had like 27 crores in profitability. So
I don't know where this 27 crore figure has come from. Huh?
So it's in the
disclosure. We have a disclosure requirement when we... So there we gave what is the revenue
but that 27 crores, it gets transferred, to Nashik. We have so much capacity building in Nashik.
Yeah. That makes sense. Yeah. So another question was also on the demand trend, which we were talking about in the call earlier, that October is now looking very good. So could you just give a sense as to how...
No, very good relatively, Baba. Very good means very better than the last 6 months.
Yeah.
So it's still about less than 50% of our pre-COVID level.
Okay.
And see, again, October could be, it's a festive season and all that. I don't know, Sudeep, we'll do better in November than October? We'll do more sales or no?
Sir, it's very difficult. There is.
I doubt it. We won't.
Because pre-Diwali and post-Diwali there is.
Pre-Diwali is always there. Even normally October, let's say pre-Diwali is higher than the next month.
So this month Diwali is on 14th, which is next week, and I guess we would see some slag after that. But as Chairman said, we are better off than Q2 definitely. But
much better than Q2.
Nowhere near our pre-COVID numbers. Nowhere near.
So I mean, great is like relatively speaking.
Yeah.
True. And just the last question. So I know it's early days, but if you could just shed some light on your international strategy in the long run. And how do we intend to compete with some of the big guys like Samsonite in the international arena in the long run?
Listen, it's too premature to say anything, because even the international markets are very, very badly affected because of COVID. It's the same thing, everywhere.
Yeah.
So we have to wait for a little bit more time. Right now, our basic strategy is just to sell on price. Yeah, our Bangladesh operations, we have to sell on price. But let us see, because demand has come down, so even all the other manufacturers also in China and all, they are also desperate. So they might also reduce their prices or whatever. Let us see. It's very difficult to say anything right now. But I'm talking from a broader sort of picture that we have a very low-cost manufacturing operations in Bangladesh. So there is good opportunity to probe these international markets. We are not doing it aggressively at all because we didn't have enough capacity to manufacture for our Indian operations also, for our Indian sales, which are ready-made sales and which are much more profitable than selling abroad.
Sure. Yeah, thank you so much. That's it from my end.
Thank you. The next question is from the line of Madhuchanda Dey from MC Research. Please go ahead.
Hi. Hello. Hello.
Yeah, go ahead.
Hi. My question is, as you mentioned that, roughly 50% of the demand
could come from, was coming from wedding, and the demand for backpack is contingent on, schools, etc. opening. Similarly, if you could shed some light that pre-COVID, say in FY20, what percentage of sale was completely contingent on international travel?
It's very difficult to actually say so much.
I think, Sudeep, I think we should now analyze this a little bit more,
Yeah, we should, because
so far we didn't bother so much. We have some idea. But your question is very correct now, we have to analyze this. Till now, earlier on, we said, whatever is selling, we are making it, And it didn't really matter from where the demand came. But I think we have to get into these details, get more granularity on this.
But any rough idea,
anything
sir?
you like to add, Sudeep?
Yeah, it would be anything between 10 to 15% would be international travel. The rest will all local.
I can tell you one thing, that definitely, like an international brand like Samsonite and all would have a larger share than us in international travel. I can't say how much. It might not be too much also, because our brands are also very strong. But definitely international brands and all, because they have a guarantee and all, which is applicable everywhere, though very few people really need the guarantee, but it is a good selling point. So their market share might be slightly higher than what their market share is in India. Like we still would be the largest, but not by the same proportion as we are in India. That is my general understanding. It stands to reason.
Okay, so say in a normal course, you would have grown by at least 10 to 15%, right, annually?
Yeah.
So if suppose this 10 to 15% or even 20% is roughly your share from international travel, why is that your reaching the pre-COVID level would take so much longer, like 2 to 3 years?
Because if you see even the domestic travel is nothing that everything's come back. I mean, we are talking about a situation where, somebody in the previous call said office is not opened. Office is opening for 1 or 2 days a week. India has also not come back.
In the first quarter, we did 5% of our sales.
Yeah.
No, I'm not talking about FY21.
The sale level has gone down, na? So where's the question of growth? I mean, we have to grow from where we have fallen.
Sir, I'm not asking you anything about FY21. FY21 is well understood because we have only done 140 crore in the first half. But I'm talking about FY22.
See, can I come in here? Let me say that it's always better to plan a little bit of conservative so that we manage your cost well than to plan aggressive, because at the end of the day we don't know how it is going to pan out. I'll give you an example. If quarter 3 doesn't do well, if people are not traveling in quarter 4, how will people travel in quarter 1? Okay, so if for instance quarter 4 is a 400 crore quarter or a 500 crore quarter, and we know that there is a growth of 20% between quarter 3 and quarter 4 and quarter 1. So my point is, it is very difficult to be very excited. Some people may be talking on hope, but realistically speaking, we would see even the domestic market has not come back. Marriages have not happened. Domestic travels are not happening.
Let me put it in another way, madam, is that what happens is that for us to get back to our pre-COVID level is very easy. Now we don't have to do anything. We have the whole organization. We have our own manufacturing in India, in Bangladesh. So that we can do at the flip of, in 1 month we can do it. Yes. It doesn't take us anything to do that. So we're already ready for that. We have the whole organization. So we don't...
I think, let me come in here. So just to reiterate my point, it is very hard to predict 2021 travel volumes, domestic or international. But we can say we are very well placed to come back. Okay, so should domestic passenger traffic in 2021 be 80 or 90% of, let's say, last year's volumes, 2019.
2021 is, this year, yeah? 2021 is current year.
Let's say calendar year 21. Suppose the calendar year 21 domestic passenger volumes are 70 or 80% of 2019 calendar year domestic volumes, then our revenues will go like that. If our domestic passenger volumes are 30-40%, then they will stay 30-40%.
Let me correct you. 21 it will increase quarter-wise. So maybe last quarter of 21, that is October to, means 1 year from now, that quarter might be 80% of pre-COVID level. Okay?
Yes.
But see, it doesn't make any difference in our action. If it happens, we are ready for it. We don't have to do anything great to do that. You follow?
Understood. Yeah,
but we have to be but we cannot increase our overheads right now. So we have to be careful. If it happens, we'll happily do it. We want it to happen.
Yeah, that's helpful. Thank you very much. Thanks.
Thank you. The next question is from the line of Sanket Garodia from VEC Investments. Please go ahead.
Hi, thank you for the opportunity. Of course, understandably so, and we're going through tough times and coming out well. Is this giving us an opportunity to explore, say, other segments that we could cater to? For example, say, laptop bags and the like?
We already have laptop bags.
Yeah, we already have that here. Yeah.
So are we seeing traction there, or
sir, as I said,
laptop sales are up?
Sir, offices have not started. How many days of office do you do this last week? So India has not opened, sir. The moment India opens, we have products. We have been selling products. We know. So you have to let India travel, whether it is domestic, whether it is local, whether it is international. As and when, like Radhika said, our trajectory of business is quite same as the trajectory of the airline business. Now, some airline is hopeful; they're planning big. The only thing is we are not going to plan on hope. We are going to plan, and because we can turn around things faster, it's all going to be quarter-wise. If the airline business goes up, our sales will go up. If the offices open, our laptop sales will go up because we already have those products and they're enough in the stocks, right? So there is nothing, and currently there is no trend seen because, the sale is 100 crores. Where are we? Are like 25% of what we used to sell. So there is nothing that we can give you as a trend.
See, one thought just occurred to me, and that is more in relation to the previous question. That depending on the industry, it's very easy for us to get back to our older levels. And let's say for a hotel, so it's absolutely easy. If the hotel occupancy is 20% or it is 80%, for 80%, they don't have to do anything virtually. The hotel is there. And they might have reduced some staff. But those guys are also, poor chaps are unemployed, so they'll all get back, So similarly, for us to get back to our older levels and all that is very easy. And what you said about laptops is laptops are very much like these small items, like backpacks and all. And so they are already, they are the cheaper items. So far we were not concentrating so much on those. Now we will be doing more. Like a lot of these luggage, computer companies, they have very big orders, but their prices are very low for these laptop bags and all. Because they are OEM manufacturers. So they want at the cheapest. So let's say if it suits us to get at those prices, we'll do it.
Thank you. The next question is from the line of Siddhartha Grover from Equirus. Please go ahead.
Thank you for the opportunity, sir. So, sir, as we can see in the numbers, the H1 revenue has been approximately 140 odd crores, whereas the inventories have only decreased by 50 crores. So what explains this 90 crores divergence?
Inventories are at cost price and sales are at selling price. So our selling price is nearly double of that. Basically, that will be the... And then we might have bought out certain things. But I think broadly it is a difference in selling. Huh, Neetu?
Yeah, a bit of manufacturing at hard luggage.
A bit we added, yeah.
Okay, thank you, sir.
Thank you.
Good question, good observation.
Thank you. Ladies and gentlemen, that would be the last question for today. I now hand the conference over to the management for the closing remark. Thank you, and over to you.
Okay. I think in conclusion, I will say, I'll repeat what I said earlier, that we are in a better position than other luggage companies, I would say, all over the world, because we have opportunities to sell in international markets. And because we have our own manufacturing facilities for now nearly 100% of our sales, we are definitely better off than most other luggage companies, because all the larger companies in luggage business do not have their own manufacturing at the moment. So shall we conclude, Shraddha?
Yes, sir.